Well, it's time now for a look at the day's top business news with France 24 business editor Kate Moody. Hi, Kate.
Hi, Brian.
We're starting with a very real consequence of inflation, one near and dear to many of our hearts, perhaps. Heineken going to raise the price of beer.
Yeah, it's really the perfect storm for the world's #2 brewer, Brian. I know that face, don't I? Heineken saying it's going to be forced to increase the price of beer and cider, which it said, and that's because it's going to be compensating for what the CEO has described as vicious and off-the-charts inflation. Now, the Dutch drinks giant said its net revenue had risen by about 11% to just under 22 billion euros last year, but it expects to be significantly impacted by inflation and supply chain pressures going forward. We will offset those input cost increases through pricing in absolute terms, warning that could lead to softer consumption or lower sales. Now, over the past year, the price of barley has doubled, while the price of aluminum for cans is up by about 50%. Energy and transport costs have soared, and many key markets have seen a shortage of truck drivers as well. That means that from start to finish, the process of brewing, bottling, and distributing beer is rising. It's not clear just how expensive Heineken brands will become for buyers. Rival Carlsberg has announced similar plans to raise pint prices, but it is a very concrete example of inflation in action for both businesses and consumers. Well, consumer prices are rising at their fastest paces in decades in both Europe and the US. This Wednesday, the UK confirmed its inflation rate had accelerated to 5.5% in January compared to a year earlier. That's the fastest pace in 30 years and nearly triple the central bank's 2% target. Farmers across France have been demonstrating this week. Protesters parking tractors and burning bales of hay in front of major supermarket chains, as seen there in Nîmes earlier today. They're angry about the cut price offers on food, which aim to attract more shoppers, but which farmers say leave them on the losing end. Well, there are concerns in supermarket aisles as well. French consumers struggling with the rising cost of food and energy, with inflation forecast to hit 3% here in the coming months. It's left many families worried about their budgets, as James Mulholland explains.
Changing habits at checkout. As prices for basic goods continue to rise, many French people have had to resort to budget supermarkets.
A packet of pasta used to cost 45 cents. Now it costs between 65 and 70 cents.
My groceries used to cost me 40 to 50 euros a week. Now it's more like 60 to 70 euros. We have to do without some things, so no nights out, no restaurants.
And it's not just at the supermarket. Consumers are also feeling the pinch at the petrol pump, with prices rising as high as €1.85 per litre.
I used to spend 60 or 70 euros for a full tank. Now it's around 90 euros. It's incredible.
According to a recent poll, 80% of French people feel their purchasing power is plummeting, but figures show it actually rose by 1.8% in 2021. The apparent disconnect can in part be explained by the rising cost of raw materials and energy, and also how purchasing power is calculated by the National Statistics Agency before basic monthly expenses.
Even though purchasing power has increased, the way in which we measure it doesn't reflect the money left after we pay the bills. So the cost of living, such as rent, energy or bills increases, then the purchasing power can rise, while the money left over can actually go down.
Polls indicate purchasing power and inflation will be among the top issues in the upcoming presidential election in April.
Let's check in on the day's trading action now. A fairly muted close for the major European indices. We saw slight losses in London, Paris and Frankfurt as investors take a breather from earlier recent volatility. Wall Street's trending lower as the latest minutes of the Federal Reserve's meeting confirm that the central bank is planning to raise interest rates soon. Markets shrugging off stronger than expected consumer spending data. Retail sales jumping at 3.8% in the U.S. in January. Oil prices have risen again, still focused on the Russia-Ukraine tensions. The international benchmark Brent crude jumping back towards its 7-year high of $96 a barrel. You can see there it's trading just over 95. US WTI about 93.90 this hour. Oil markets very, very reactive to any hint of geopolitical uncertainty. So we'll be keeping an eye on that, Brian.
Indeed, continuing to drive those inflation figures too, no doubt. Kate Moody with the business.